Hi, this is Tom. I'm here with Coach Paul with Liberty Club Trading, and we are here this evening to do a pregame show basically before tomorrow's webinar. We have a lot of exciting things to talk about. We've got several outstanding giveaways that are sure to be bound to pique folks' attention, including Bill Knox 50K eval accounts, and we're giving away three Liberty Trading Club premium memberships. Premium? No, it's not premium. Premier memberships. So we're going to be giving away those. So tonight we are just here answering any questions. And anybody, I've actually got the link out there. If you got the email, then all you got to do is click on the link, and we're actually going to admit you into our show here and ask any questions or answer any questions and go from there. So, Paul, just kind of, give us a little bit of a breakdown of the room, kind of how the room runs and, what happens in a typical day.
Okay. Well, a typical day is pretty simple, right? We usually log in around, depends. I mean, obviously days like today where we had news, we're usually in there a little bit early, about 8:30. We roll in, but Brian and myself usually roll in about nine-ish roughly every day. We will go over a trade plan. We look at the markets. We go over a trade plan, see what we're looking for that day. We basically trade three indices. We trade the ES, the NQ, and the YM. That's all we stick to. Mainly the ES and NQ, to be honest with you. So that's really what we trade. So we mark it up every morning. Look decide what we're going to look for as a room, and then we just sit back and wait for our trades to develop. We are very patient traders. We say this a lot in the room all the time. We are very simple traders. We keep it very simple. We're price action and support resistance style traders, and we will wait until we get the proper setup. Then we will take our trade. We usually like to make our dollars and get gone. That's the whole idea.
Now, that's in comparison to, because there's actually a lot of people that are newer that come in, they see that volatility right off the jump, when the market opens and everything else, and they try to get in on a candle, that's shooting up, which is typically, can be known as a, breakout, fake out or whatever. And, can you talk about, that's pretty much the market moving it in one direction in order to set it up for the direction that they want it to go in, right?
Correct. Typically we don't try to chase things like that. We try to stay, especially at the open, obviously very volatile, right? But the beauty of what we do is we do have a very strong, what's the word I'm looking for here? A methodology, right? That we follow intently. We look for certain things to happen, and I'm not going to get into everything obviously right now, but that's what tomorrow's for. We look for certain things to happen in the market and to give us confirmation to take those trades. And when those things line up, we're in. Simple as that.
And that goes to exactly what you were saying of why we wait, 8, 10, 15 minutes, that we don't play off of that open.
Yeah, now we don't. Now typically, I say that. Now some of our members are a little more experienced, right? The thing about it, we jokingly call it a one-room schoolhouse. Because why do we say that, right? Because there's, we have ladies and gentlemen in there that are very skilled, very qualified traders, and then we have people that are literally just getting started in the futures world and don't really know what's going on. So, hence the one-room schoolroom, right? Schoolhouse. So, typically we will tell you to wait. We like to say wait a minimum of 5 minutes or 6 minutes after the open before you even consider anything. But that being said, some of our members obviously have the skills that can take those trades when you see that what you were talking about happen. So it varies. It varies on the trader. It's individualized.
Well, that's definitely one of the things, is being able to recognize those, those type of moves, and being able to see and picking up the experience or seeing the experience when somebody has that, but for somebody like me, obviously I'm newer to the room, and I've got I've got my own set of failures that I had coming in that you all have been correcting and making better for me. I mean, to the point that I was having the conversation with Brian tonight, is that, we were talking about blowing out accounts. I said, you know what, for once I didn't blow out an account. Actually, I'm still in good shape. I made a series of bad trades and I lost some money and got down below where I should have been to pass my eval. But you guys are teaching me, and you personally taught me a method that that keeps the losses manageable to where you have enough. Can you talk about that a little bit?
Yeah. And as you know, Tom, because I say it a lot over and over in the room, it's really quite simple. It all boils down to risk. And I say this like I was that guy, right? We all were, especially when first getting around. I have had my share of failures. I've had the blown accounts. I've done all that stuff, and it really comes down to a couple things, which are the things that you and I have talked about, obviously, which is mainly risk management. If you are controlling what you're risking, and I always say keep your losses recoverable. And that's where a lot of people fail. That's where a lot of amateur traders, right? They take a loss, they see that red P&L, anxiety kicks in, FOMO, revenge, blah 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 kicks in, and next thing you know, you're tacking on contracts or you're doing things that you would never do. And what happens? You blow up accounts, right? But the way we like to structure things, and again, I could go into it, but it takes a little bit longer than just a quick conversation. But it's a really simple scenario, right? We calculate a percentage of, and this also goes to whether you're trading cash accounts or whether you're trading prop accounts, right? Two different numbers. If you're trading a cash account, it's a different game. If you're trading a prop account, it's a certain game. I'll use prop account because, to be honest with you, the majority of people nowadays have some sort of a prop account in one way or another. We like to keep our daily risk of prop accounts to anywhere between 10 and 20%. Why do we say that? Because if you do that, it keeps you in check, right? It doesn't. If I only have if I'm only have a daily risk of $400 or $500, if that's 20% of a $2,500 trailing drawdown on a $50,000 account, well, then I have to ask myself, how am I going to trade this $500? Do I want to tack on 3 minis and run the risk of it going against me a few ticks and I lose my $500? Do I want to size down into micros and be able to lose 2 or 3 times and not hit that daily loss? It brings in a lot of control over what you do. But here's the deal: if you don't go past those losses, if you learn to accept a loss, I was telling you guys in the room yesterday. Yesterday was a very interesting day for me. I can't tell you the last time that I actually took a losing day across all my accounts, not one, all of them. But it happened, right? It happened. And rather than me get bent out of shape and say, oh my gosh, the world's coming to an end, I can't do this, I'm going to have to tack on contracts, get this loss back. No, I stuck to my rules. I hit my daily loss on a bunch of my accounts, and I just moved on to the other accounts, and I just cycled through them. And guess what? I came back today, had a very good day, got every one of them, well, almost every one of them back to above ground, and I'm ready to go for Monday morning. Why? Because I didn't panic. I didn't do anything foolish. I didn't react. I just understand that in this world that we live in the trading world, you win and you lose, period. Everybody loses and everybody wins. We all do. It's a matter of controlling those losses and making sure that your wins are greater than your losses. That's a whole nother issue, right? How many of us have that problem? They see you're in a trade, it goes in your favor. You see a few dollar bills, you just tighten up that stop, get out of that trade. You're pounding your chest with your $50 profit, and the trade goes on to be $1,000 win. That's another thing we teach, right? We teach you how to control your trades, how to maximize your potential profit in a trade, and hopefully, ultimately, you have more winners than you have losers. That adds up to a paycheck.
And that brings me to another point that gets there is over trading. That's a good way to lose what you've gained
100%.
Pretty quickly, especially when the fact that the market structure changes the closer that it gets, or the farther it gets past open. I think that's where sometimes people get lost in the fact is that the consistency changes, the volume changes. You might not get the same setups that you did in the beginning, but they'll still be, trying to get those throughout. Can you speak to that a little bit?
Yeah. So there's unfortunately, this comes down to an individual trader, right? Every one of us is different. We have different skill levels. Some of us have the ability to trade all day. Some of us better take that first P&L green and call it a day, because there could be other psychological issues going on, right? Are you addicted to this? Are you a gambler? Do you go Wild West? Are you disciplined? Do you have a solid trade plan? All these things factor into the answer to that question. Generally speaking, though, the daily risk still plays into effect. Okay. What I mean by that, and I'll go back to that $500 example that I'm using. If let's just say we have a $2,500 account, right? $50,000 prop fund, which like Apex, Buell Knox, all those other ones, those are $2,500 accounts, and that's what your drawdown is. 20%, $500 daily risk. Okay. As long as you don't let yourself come back $500 and you're a good, solid trader, meaning you have the discipline to wait for clean A+ setups, take the setups if the market gives it to you, right? Some days the market just won't give it to you. Some days you have to understand, hey, this is not a market to trade. If I'm happen to be green, I'm going to walk away with a small green or a small red. Sometimes walking around red is a good thing. Walking away red is not a bad thing. A small red is a win depending on the market, right?
Yep.
But generally speaking, what I like to tell the people that I coach is, hey, look, if we've set a daily risk for you of say $500 and you're having a good day and you're making money, right? As long as you don't come back $500, keep trading. Keep trading. You make $1,000, you make another 500, you make 1,500, and then your next trade you lose 500. Well, then your day is done. Or if you happen to lose, if you make $300 and then you lose 500 on the next one, you walk away with a $200 negative loss. There are many ways to answer that question. And again, that's not a general question. It's one of those where we have to assess the trader individually, decide where they're at, skill level, emotional level. What do you know? What don't you know? What can you control? What can't you control? Then we develop a trading plan based around that. And then the thing is to get people to stick to the trade. But ultimately, look, what I'm trying to say here is there's a lot of people out there. There's a lot of things out there, a lot of methods, a lot of YouTube gurus, which by the way, we are not. But there's a lot of things being sold out there as the next shiny nickel. I ultimately don't care what you're using as a methodology. I happen to think that our Liberty entries and our Liberty methodology works well. It is proven with the several hundred people we have in the room every day trading our methodology and doing it successfully. But that being said, whatever you're using, you have to have a strict plan based around that, a trading plan, a quote unquote business plan. This is a business. Ultimately, this is a business, right? We all want to make money. We all want to get paid. But you're not going to do that if you're just out there Wild West gambling and just looking at a market saying, okay, Mr. Market, what are you going to give me? I think I'll take this long because there's a big green candle there. No, you have to, we say that, but you have to have a solid plan. And it all begins with risk and knowing your numbers. Knowing your numbers. That's another thing we talk about, right? If you are not tracking your trades, I'm going to venture to say that you're not serious about trading. Very few people I know that do it at a very successful level. They can tell you your numbers. I can tell you my numbers. I know what my average risk is in each market, what my average profit is in each market. I know that. Why do I know that? Because I've tracked it for years. I track all my trades. I have my stats. I know what I'm good at. I know what I'm not good at. And I don't pretend to, and I don't force the things that I know I'm not good at. This is how you learn. These are all the things that come into play, that by tracking trades, keeping risk under control, never over leveraging yourself. That's the biggest problem I see with, look, let's be honest, right? Prop funds, it's kind of tempting. They put them on sale for 90% off and you're picking up 50K accounts for $10, $15, $20. It's only $15. If I blow it, who cares? Well, I venture to say, go back and look and see how many of those you've blown, and you've probably blown a nice cash account. You can't just randomly do it. You have to treat this like a business. There has to be a standard operating procedure, and there has to be a solid business plan in place. And that's what we do. That's honestly what we, this. That's some of the things we're working with you on, right?
Yep.
But how simple is it? I mean, we're not preaching anything complex here. Again, like I said earlier, we are solid core methodology. We read price action levels, support and resistance. We look for areas of previous reaction, interaction, and trade off those levels. Does every trade we take win in the room? No, not at all. Not at all. But we win more than we lose. And when we win bigger than we lose. We control our losses. And that ultimately is what makes you a consistently profitable trader.
And that's the name of the game.
Yes,
everybody, I want to remind you that we're having our webinar tomorrow at 10 a.m. Eastern. If you're interested in signing up, go to go.libertytradingclub.com/webinar. I've got it up on the screen. go.libertytradingclub.com/webinar. We've got 5 Buell Knox 50K evaluation accounts that we're going to be giving away throughout the webinar, and 3 LTC Premier 1-month memberships. So in this membership, there's over $7,000 worth of value. In that membership, you're getting access to our tick reversal, tick sentry, which are auto traders that assist in getting into trades quickly. We've got one-on-one coaching, 2 sessions of one-on-one coaching, and just a whole list of things that you'll be able to see in there tomorrow. So I'm looking to see if there's anybody joined in that on my side to see if there's any questions. And as I look here, it looks pretty quiet. If anybody's out there, go ahead and put out your questions. I can't see usage. All I can see is if anybody is sent a message in the chat. Let's see, what else do we got here? So to expect tomorrow, it's not going to be your typical trading seminar. Okay, Brian's going to be pulling back the curtain on how institutions actually trade. It's the stuff that they don't train in or trade that they don't teach in trading courses. All right. Going to cover how to identify initial zones, the psychology that separates winners from losers, the real-time chart analysis techniques, and how to stop trading like a retail trader and start trading and thinking like a pro. So that's and being able to spot institutional moves, Paul. I mean, that's also, to being able to spot them and understand what's an institutional move and why an institutional move happens and how it affects retail traders versus, people trying to do that. Because sometimes people will get involved in institutional moves that they should have stayed away from, right? Because they didn't recognize it.
Correct. Yeah. And obviously don't want to spoil everything for Brian tomorrow, but yes, that's a big thing, right? Let's face it. What do we want to do as retail traders? Are we going to move the market? Is there anything that we could do to affect the market? No. I mean, nobody here is big enough to do that, right? So all we want to do is we want to learn to find institutional involvement, determine what they're doing, and then basically ride their coattails. And again, that's what we're going to go over tomorrow in a whole lot more detail. But yeah, I mean, you also have to know when to stay out of it, exactly what you just said. And the first and foremost thing is just to figure out, figure out where I can't speak this evening.
I know the feeling.
Let me try that again, see if it comes out correctly. But yeah, you want to determine where you've had institutional involvement in the past, where there might be institutional involvement in the future. And then based off what you see, which direction is it going to go and where can I get in to benefit from that? This is all stuff Brian is going to go into detail tomorrow about. And trust me, you're going to want to hear it. It's I've heard it 100 million times, and every time I hear it, I get a little gem more out of it. So it really does. How do I say this? It really is going to change the way you look at the market. It's going to change the way you interpret what those candles are doing. And it's going to hopefully right? Make you a better trader in the sense of you're going to be more patient. You're going to wait for that proper setup because you're going to know more or less what's going on and where. I don't want to say that you're going to know where the market's going to go. Nobody can predict the market, but he's going to give you a much better advantage and a higher likelihood that you're in the right direction. Definitely don't miss that part.
Indeed. And there's a lot more that he's also going to talk about tomorrow.
Oh, there's a whole bunch of stuff. And
Yeah.
listen, and every bit of it, if you take it, I suggest you show up with a notepad, take notes. But if you put it all together, it's going to be what I talked about earlier. It's going to give you that solid core, that business plan that I call that you're going to need, right, to become that consistently profitable trader. Or at worst case scenario, if you're already there, it's going to give you some other angle, another way to look at something. Maybe something you've been omitting. Maybe there's, we all have, every one of us, myself included, right? We have things that we just don't do right, we don't see right, or continue to do wrong. These are the things, again, basic core methodology of trading. Learn these things, get that foundation down solid, and then build from there. That's what you're going to learn tomorrow is the foundation stuff. And that's what we all need, right? Can't build a house without laying the foundation first.
So probably the three biggest mistakes that retail traders make every single day. It's trading without the institutional zones. Would that be fair?
Huge, right? I mean, think about that. Think about what you just said. If I have an area that I have mapped out prior where there's a high likelihood that the market's going to react, is that an advantage?
No.
I would bet you to say yes.
Yeah.
Now I'm gonna toot our own. I'm really having trouble speaking here, Tom. I'm gonna toot our own horn. Let me say that 10 times. Our zones are awesome. They're live dynamic zones. What I mean by that is they are ever changing throughout the day. Coach Brian and myself, we adjust them as the market changes. So, and the beauty of it as a member, every time we make an adjustment on our end, it shows up on your chart as an updated level. So imagine having strong areas, strong zones, institutional areas where there is going to be a likely reaction in the market. You think you could possibly plan out a trade if you know that? 100%.
Another thing is emotional trading.
No crying in baseball.
Yeah.
No crying in trading either. So emotions, I say that, right? We all have them. But here's the one thing that I can tell you is the more you develop this plan, the more you have that solid methodologies, the more you can master those entries, the more you get the confidence that what you're doing is right. Again, I'm not saying that what you're doing is always going to win, but that what you're doing is correct. Then a lot of that emotion tends to go away. Because if you have, and I say this to a lot of people when I talk to them, is, when they tell me, well, I'm just this emotional trader. I push the button and anxiety goes through the roof and I can't. Look, if you're getting in a trade and that's when you're getting nervous, I hate to tell you, you don't have a solid system. You don't have confidence in what you're doing to be taking those trades. I can tell you with 100% certainty, I get more anxious trying to develop and plan for the upcoming trade than I do when I push the button. As soon as I click that button, I have no feelings because I know one of two things is going to happen. It's going to win. It's going to lose.
Yeah.
That's it. Do I care if it loses? No, because it's within my risk. It's within. It's a budgeted amount. It isn't something that's going to break my bank. So as long as you are trading within your means, if you're not over leveraged, you should be able to take a loss. So you shouldn't care if you win or lose. You really shouldn't. I know that's not the norm. That's not what most people say, right? It's, especially the people on YouTube. They're like, win, 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 right? Lamborghini in 30 days. Doesn't work that way. Does not. What you do is you develop a system, a solid plan, and you get the confidence to know that what you're doing works. Not all the time, but works more than it doesn't work. With that comes emotional stability. Now, here's the beauty of Liberty. I say that like it's no big deal, but I myself have struggled with it. We all struggled with it, right? But here's the beauty of it is we have ways of getting you past that. And some of the things that Brian and myself teach, um, I want to say we kind of handcuff you a little bit at first, right? And we do it on purpose because we teach you that discipline of, hey, if I'm only looking for a couple things in the market, and I know that if these things happen, there's a higher likelihood that this is going to be a winning trade. Well, that takes a lot of emotion out of it, and then it's just a matter of dealing with the other little issues like money. Here's another thing too. I venture to say that if you're a highly emotional trader, it's because you're chasing the dollar. And I'm going to tell you right now, don't chase the dollar. The dollar is a byproduct of what you do. Okay. What I mean by that is chase the process, chase the methodology, chase that. Don't worry about the dollars. I always say, don't even look at your P&L. Just trade valid setups, A+ setups. The ones that work are great. The ones that don't, it's great. It doesn't matter either way. Because if you do that, there's no emotion because I'm not stressed out about, oh, I have to make X today. If I, what's it? Well, if I have 20 prop accounts and I can make $1,000 a day, it's 20 grand a day, I'm a millionaire. Okay, that's great. But there aren't that many people doing that. Let's be honest, right? How about we just say, I'm going to perfect this system. I'm going to become very good at what I do. I'm only going to take certain setups when they arise, when they happen in the market. And if the market doesn't give me, look, here's the deal. Every morning before I sit down and I do my pre-market analysis, I know exactly what I'm going to trade that day, without a doubt. And if that doesn't happen, Paul doesn't trade. And I'm okay with that. Why? Because I know that I'll come back tomorrow and it'll probably happen tomorrow. But if I do that consistently, there's that speech thing again, consistently over a 20-day month trading period, I know that there's going to be money there. There always is. So that's the way you get rid of emotion is you just basically, you make it a emotionless business. It's a process. It's checkbox, 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 execute. That's it.
And I don't know if this rings, true with some of you that are watching right now, but I mean, I've been there, which is why I can speak to this. I kind of know where this particular landmine is located because I stepped on it numerous times and somebody kept resetting the damn thing. So, at one point I, was looking at this to replace my income. And I was in a situation where, I didn't have anything coming in and, or we had very little coming in. And I thought that this was going to be the answer and it was going to be the end all and the be all. And I can tell you from experience that all you do is you hurt your own growth by doing that because you put a ridiculous amount of pressure on yourself. You end up taking trades that you shouldn't take. You might get in and you might catch a good run and then you'll be like, well, I didn't make enough money on that. So I'm not going to walk away from it. I'm going to stay in. Then you overtrade. And then when you overtrade, something happens and you lose half of the $1,000 that you might have just gained back. And then you're like, well, I can get that back. I got it the first time. Then I can get that. Now you start revenge trading, right? So if you're in a position where you have a full-time job, okay, and you've got the ways to do this and take your time and learn and get to consistency and being profitable. Not that you have to have $1,000 days or $2,000 days or $5,000 days. If you just have good $100, $50, $300 days on a regular basis.
Let me ask you a question. I don't mean to interrupt you, Tom, but how many doctors, how many surgeons start operating on patients day one in school?
There you go. None.
I was talking to a guy today. He drove those big trucks, those big cranes, those like 2-story, those like they're out of mines and stuff like that. He was telling me it takes an average of 5 years to learn to master to drive those things. So I can't imagine that expensive a piece of equipment. They just let somebody jump in there and start pulling levers and hope it works. What in the world makes you think? Well, I know what makes you think that. It's the gurus on the internet, right? It's like, just follow me and you'll make millions. Here's the reality, and this is what a lot of people don't want to hear. You aren't going to, if you are trading from a position of I got to instead of I want to learn, If I got to make X, I'm going to save you a whole lot of heartache and a whole lot of money. Don't do it.
Yep.
Go find a job. Seriously. And I mean that with all due respect. Why do I say that? Because you aren't going to master this in a month, 2 months, 3 months, a year. I'm not saying you can't be profitable, but you aren't going to be making a, 6-7 figure paycheck in a year. Some people, I mean, I'm not saying there is an exception to the rule, but those people are usually very talented and they do a lot of studying. Michael Jordan didn't become Michael Jordan. He didn't step on a court. Well, wasn't even cut from his high school basketball team. So, it took years of practice, right? Kobe, that man practiced way more than he ever played. So if that's the way you're approaching trading, if it's a necessity, I hate to tell you, I think you need to find another way to supplement your income while you learn this. This should not be the main draw. This shouldn't pay the bills up front, because it will not pay the bills up front. Now, that being said, can you do it? Yeah, absolutely. If I can do it, everybody else can do it. Did it take me a long time? A lot of heartache, a lot of lessons learned the hard way? Yeah, it did. But again, the things that I preach every single day, day in, day out, are the things that I learned the tough way, right? Which you get the benefit of just listening to me preach. But if you treat this like a business and understand that most businesses takes 3 to 5 years before they turn a profit. They operate in the red for years up front, right? Paying back debt, what have you. Well, pay your price, go to school, learn it, make a little bit of money. Better yet, trade sim until you can master something. I would much rather you come back to me and say, hey, I traded sim, or whatever. I bought a cheap prop account and I'm trading micros, as in 1 micro, max 2, and I'm making $20 a day, and I've done that for 30 or 45 days straight. Okay, you might have an edge now. There might be something you're doing is working. Let's take a look at that and see if we could increase the amount of micro contracts you trade. Maybe we go to 4 or 5, and then you do it for another 30, 45 days, and you make a little bit more money, right? But now you're really getting confidence, experience, and a whole bunch of other things. And when you're ready, then you take the leap into the bigger accounts, or the multiple accounts, right? There's another thing. It's like, don't go out and buy 20 prop accounts. Don't do that. All you're going to do is, get 1 or 2 that can pay you consistently, not just one lucky paycheck because you happen to catch CPI on at 8:30 in the morning and you got lucky and it paid out. Like seriously, have some consistency. Then take the profit from those and buy more, and so on and so on and so on. And over time, you build it up to a nice little portfolio that creates real wealth, right? But yeah, I always jokingly say this business, this is the hardest easy money you'll ever make.
Yeah, isn't that the truth?
Without a doubt. But it's very doable. I don't say that to dissuade anybody or burst anybody's bubble. I say that if you're willing to put in the work, right? And I know you and I, Tom, have talked when we coach, right? What do? You've got stuff to do. You've got homework. You got to practice. You got to log your trades. You got to show us what you're doing. Why do we say that? Because we're mean? No, we say that because that's the way you're going to build discipline. That's the way you're going to get that solid consistency going. I know. I've seen it with too many people. Happened with myself. Same thing.
And that's the thing about trading is that this is not a get rich quick either. I mean, based on the same premise that Paul just talked about, this isn't something that you can just sit down. Not to say that you won't sit down and get lucky. I mean, every once in a while, a squirrel will find a nut, but it doesn't mean that, luck isn't repeatable. It's not. It's just not. Luck is luck. So, you have to come in with the right attitude, and you have to do that. And that's one thing that Liberty does a wonderful job of, is that everybody's on an even keel. The support from the community is great. Everybody's on the same page. Everybody that's in the room is willing to work with you. We get together in the afternoons, and, we trade on our own. People will, if you're struggling with something, they'll help you learn it. There's just so many benefits, to the room, which we're going to talk more about tomorrow on the webinar. So speaking of which, that webinar is tomorrow at 10 a.m. Eastern. Starts at 10 a.m. Eastern and is 3 hours, goes till 1 o'clock. And we are giving away at least 5 Buell Knox 50K eval accounts. And then we're giving away 3 LTC memberships as well. And those memberships include quite a bit. And I think we're probably going to cut it here. And unless there's somebody in the room that has any questions, nothing's popping up on my screen. So Paul, unless you see anything else, I'm going to go ahead and kill the feed. And everybody, we will see you tomorrow at 10 a.m. Eastern. Have a great evening.
All right, everybody. We'll see you tomorrow. Thank you.